Are you worried about blowing your trading account? Have you even thought that maybe you could blow your trading account with gear trading? Has it a thought that's ever crossed your mind? Because blowing trading accounts is a big thing amongst traders. Funnily enough, so many traders get into trading and the last thing they think about is the possibility that you could blow your trading account. Well, if you've ever blown a trading account, or if you're worried about blowing your trading account and coming in and finding your account on zero or minus whatever amount, then come into the office with me today and I'm going to talk to you about how you can prevent yourself from actually blowing your trading account. Today we'll go and look at the charts and we'll go and show you the system that I've used for the last 30 years, and we'll go and see if that can work for you and help you to become a profitable trader and prevent you from actually losing in the stock market or for trading Forex or trading indexes or whatever it is you trade. The system is the same for everyone, and the system is quite simple. I'll show you the charting system, but at the end of the day, it's all in the mind. It's all in your head. It's all about 50-50 trading. In other words, you have to understand that every single time that you take a trade, you have a 50% chance of winning that trade. And every time you take a trade, you have a 50% chance of losing that trade. No matter what your system is, no matter how fancy your system is, no matter what fan-dangled stars line on the left and stars aligning on the right and the moon turning green system that you have that says to you, you can become a 90% successful trader, which is not true. There are so many guys out there touting that their system will make you win 90% of the time, and it's just an impossibility. It just doesn't happen. It never happens. It won't happen. Don't believe it. You know, if you go and study to become a doctor or a mechanic or a salesman or whatever it is you do, that you didn't learn that in a day. Let me tell you something, guys. You never learned that trade in one day. So if you think you can learn trading in one day, then something is amiss, something is wrong. And if it's too good to be true, it most probably is. So be very careful of what you believe and what you find out. Trading is risky. 80% of traders do lose money, and in fact on the lower time frames, if you're trading on the 5-minute trading time frame, let me tell you something now that you're not going to believe, and that is factually they've done tests and found out that 99% of people that trade on the 5-minute time frame lose. They do not win. Can you imagine that? So you're up against it. When you trade on the slower time frames like the 4-hour or the day, or if you're an investor, then you up your odds. Investors are a much better scenario. You've got a more of a 50-50 chance, and obviously trading on the 4-hour and the 1-hour, it kind of drops off to an 80% to 70% failure rate, which makes it a little bit better for you. I do believe that people trading on a swing trading basis, maybe more on a day, are around about 70%. So guys, drop down to the description, get your free Forex book. It's there for you. Just download it and it's totally free, and I'm not asking you anything for it. Enjoy it. And then also on top of that, don't forget, Trade of the Day is out every single day on the blog, and that's also there for you. It's just an idea. It's not trading advice. Remember, I'm not here to give you trading advice, okay? But I do put a members video out every day regarding the trades for the day. I put a list of trades that we're doing for the day. And if you want that, you're going to have to join as a member, because it is time out of my life that I take to do these things, and I'm doing everything for free basically. So yeah, it is a bit of time. So just, if you want that, but a sponsorship there. Anyway, so all good. We're going to go to the charts and we're going to go and have a look at the system that can hopefully turn you into a more profitable trader, and it'll prevent you from blowing your account. Now, how do you prevent yourself from blowing your account? What do you actually have to do to make sure that you don't blow your account? Well, it's really straightforward. What you've got to do is you've got to downsize on your risk. So there are little calculators on the internet where you can go and calculate how many lots you need to buy to put that much risk in and that much money and fancy little things, but it's not that difficult to calculate. And guys, if you can't do maths, you probably shouldn't be in trading in the first place, because trading is all about maths, right? So what you got to do is, if you put in a lot size and your risk is $1,000 and you only want to risk $100, then all you got to do is reduce your lot size by 10. In other words, if you're putting a 1 lot size in and it's giving you $1,000 risk, then put a 0.1 in and give you $100 risk. Trade within your means is what I'm saying to you. Don't trade outside of your means because you think you have to. Particularly with these prop firm challenges and things like that, I've noticed that they try and get you to trade higher amounts so that you can blow that account, because every time you blow that account, guess what? You gotta buy another challenge. It's amazing. It's actually much better to trade with your own money, but then you also don't want to blow your own money. You want to keep it in the account. And the best way to keep your money in the account is to manage your risk accordingly. So find a broker that will give you mini lots where you don't have to trade the whole one contract. Maybe you can trade 0.1 of a contract or 0.5 of a contract if you can't afford the whole contract. Or maybe you don't want to buy 2 contracts, you want to buy 1.5 contracts. There are many brokers out there that will offer you this facility, right? I'm calling them contracts. They could be lots, they could be pips, whatever you want to call them. It's each and every point. So work out how much you're paying per point, let's say. So if you're risking $200 per point, per pip, per lot, per contract, whatever you want to call it, $200 for one means for every 5 that you lose $1,000, right? But if you're risking $20, then you're only losing $100. That's as simple as it gets. So just risk less money, because where you put your stop loss is not according to the amount of money you want to lose. Where you put your stop loss is the amount of points that you can lose on the trade, or you want to put your stop loss just away from where all the other stop losses are so that you're not getting stopped out. And the only way to calculate that in is to reduce the amount per point that you're risking so that you don't take heavy loss if it goes into stop loss. If you want to risk $20, then you want to risk $20. You don't want to risk $200. So the whole point here is to keep the risk within that level and risk the amount of trade that you can afford. It means you're going to win less, of course. You're going to win less. That's just how it goes, guys. You're going to win less if you trade less, but it will sort of keep you in the game for longer. And, you know, especially when you're a beginner, when you're starting out, don't risk it all, because then you're just throwing it all on the table. There's so many guys out there that'll tell you to risk it all, to throw the money down, to take the risk, to go for it. You haven't learned how to trade yet, so you're just going to be throwing all the money down a hole, effectively, because you haven't learned how to do it. And this is the basis of it. You need to learn. You need to walk before you can run. Once you know what you're doing, you can risk more, but be careful of that as well. Don't become overconfident. Don't start trading heavy amounts because you think you're going to win every time, because that's when the market's going to come back and bite you. But now I'm rambling on a little bit. Let me go and show you a system that can help you manage that risk properly, and then we'll come back and we'll talk a little bit about what's happening next. Let's go to the charts. So if you don't want to trade heavy and you don't want to lose your trading account and blow your trading account, then just follow these simple systems that I'm showing you. They're straightforward and they're easy. Just remember to trade less and trade within your means. But the big thing here is, how do you manage your risk? So I'm just going to remove all these drawings on this. This is the Great British Pound US dollar. What's the first thing you see if you look at this chart? What do you see? You see that this is in a bearish trend. And the only time that this trend is going to be broken is when the market structure is broken. Market structure up, down, up, down, up, down, up, down, up, down. It's got to break above this level here, which is at 128.22, and it's at 127.62 at the moment. It has to break through that for the market structure to be broken. In other words, it has to go past this level before the market structure will be broken. That tells you that you actually want to be short on this particular product. So let's go to the day, because you always go to the higher time frame and just have a look at what the general consensus is on this particular item. Now, what do you see? Now you see something completely different. You see it's been trading in a range and it's actually bullish. And do you know what? It actually hasn't broken the structure of the bullish one. So now you've got a scenario where this could actually go pretty long. Now you look for your support and resistance on the day chart. That is, where's your support and resistance here? I'm going to say there is a bit of resistance at the top here. Of course there is, but I don't want to draw too many of these blocks in to confuse you. But my main resistance is right here, because it's below that and it's quite an area of concern. There's a lot of times that it hits there and then it goes back. In the past, it's done that quite a number of times. So while you do have this up here, you've also got this down here. But I'm going to leave that there, and you're going to see why now when we go to the 4-hour chart. Where's your support? Your main support level would appear to be around here. So you've got a support down down at the bottom here. Now I'm going to leave that there so that you can have a look when we go back to the 4-hour chart at what I'm talking about here. And then we've got a trend running along this way, but there's only 2 points, so I'm not going to get too excited about that trend at the moment. Overall, you could say it's in a large bullish trend. Now, if I go back to the candles, it's back into this range. So effectively, while this does look like a bullish trend, it has kind of gone into a range again. It's gone back into this range. Now, we go back to the 4-hour. Let's go and have a look at our 4-hour chart. On the 4-hour chart, we've got a slightly different picture because on the day, this was showing us that she's completely bullish. But you don't want to, well, you don't want to assume that it's going to remain bullish. Now, here's my scenario here. This price is right up against the daily resistance, and this is a very important area because it's hit it a number of times on both sides. So it likes this price. It likes this price a lot. So there's two scenarios for this particular product, which is at the moment the Great British Pound US dollar. The scenario is as follows. It could break through the resistance and go up to the main resistance, or it could give us a nice big red candle and carry on short, probably down to, not all the way down, but probably down to a sort of mid-level here because there is a trend downwards on the 4-hour, giving you a nice short trade. So you're waiting for one of two things here, and that is for it to either break long or to break short. The only way to confirm your trade is with a confirmed green candle out of the resistance or a confirmed red candle going down from the resistance. If it breaks through the resistance, it's a breakout. Wait for it to retest and then give a long green candle and go up. If it gives you a red candle down, then it's continuing on short because it isn't a short trend on the 4-hour, and you can take the short trade, keeping in mind that on the daily chart it is showing a bit of a bullish trend, so you don't want to be in this forever. This is not a forever trade. It's just in and out as quickly as you possibly can. You don't want to hold it too long. You want to wait for it to come down and give you a nice profit at this level somewhere in the middle here. And that's as easy as it gets, but then you want to manage your risk just above that. If you take a short, let's assume that you take a short here. What you do is you put your risk just above the resistance level here, above the last high, because that's where the orders might be sitting, or the other stop losses might be sitting. So you want to put yourself just a little bit away from those stop losses. In fact, if you could, even put it away from those two, put it a little bit higher, because there'll be stop losses here, there'll be stop losses here, and it'll come back, it'll take those stop losses, and then it'll come down. But if your trade has broken through the resistance and it's going to the other side, look at it as your trade is invalid. If you were to look at that trade right now and there was a green bar coming out of the resistance and it was at this level, would you go short? And if the answer is no, which it should be, then you would look at it and say, oh no, I can't go short here. This would be a long. Let me get out of this trade. My trade is invalid. Take the loss, walk away. Sometimes you can actually take your loss less than your actual stop loss was in the first place, because you can clearly see that the trade has invalidated. Same thing goes if it was on the other side with a red candle and you were long on this side. It's an invalid trade. It's no longer a long. And that's how you manage the risk so that you don't blow your account. Don't leave trades in. Don't say, oh, it's going against me. Let me add to the trade because it'll probably come back here and then I'll average it out and get out. You're wasting your time, you're wasting your money. Get into a different trade. Look for another trade. Go and look at the US 500, for example, the S&P 500 index, and say, wow, let me see if there's a trade here. And here again, if these are green candles, so you can actually take a long trade here, a long trade going up with a view to it hitting the resistance, and then perhaps getting out and looking at a short trade. Now, if you take this long trade here, then you've got to put your stop loss below the support level down here, preferably below the prices, because it'll probably come back and take out all these stops here. But I mean, if your red candle is out and it's broken out of the support, look at it as the trade has now become invalid. I do not want to trade here anymore. Let me take my loss and move on to the next trade. I've made a mistake. If you can't accept your mistakes, you can't be trading. You have to accept that you've made a mistake. Do you know what? The best traders in in the world, the most amazing traders in the world, get it wrong 5 times out of 10, just like anyone else. To become a 50% trader is actually quite a thing. It's really, that's when you can make your profits. The point is to take a loss here, but to make your profits up here, make nice big profits. In other words, you take this trade, you're looking to take a nice long profit and a nice short loss. So you want your profits much higher and you want your losses much shorter. That's as simple as it gets. Don't overcomplicate things and don't get out of control. If you keep it in control and you manage your risk and you take your losses, there's a book out called The Best Loser Wins. It's a fantastic book. Read it. It's amazing. It teaches you the psychology of, you really need to understand that you need to be able to lose to actually win, because that's where winning comes from. Once you have the right mentality and you have the right psychology, you'll stop blowing your accounts. So you've seen the charts. Now you know how to do the charting and how to manage your risk on the charting. This will help you, but you've got to get over the fear, because you've got to become a good loser to become a good winner. And another way that you can blow your account is by not getting over the psychology of losing. In other words, adding to your losses. If you keep on throwing money at your losses, you will end up blowing your account. Unfortunately, that's just the way it works. You think you're hedging, you think you're getting your money back, but actually what you're doing is you're throwing your money down a hole, because maybe 2 of the trades you'll get your money back and you'll be like, phew, relief trade, I got my money back. But the third one won't go back. It'll keep on going in the wrong direction. And when you look at it, you'll be like, well, I've got so deep in now, I can't get out, because if I get out now, I'm just losing thousands and thousands of dollars. And I've just got so deep into this now, I've got to keep like doubling up and holding on. And believe me, guys, there's one thing in the market, the guys will tell you, and this is, the market can hold out much longer than you can. The market's much more resilient than you ever will be. So in a correction, you get these corrections where the guys are like, it's going to turn tomorrow, it's going to turn tomorrow, it's going to turn tomorrow, and it never does. The minute you get out of the market and you take your stop loss, I've lost thousands now because I've been doubling up and I've been holding on to this thing instead of stop lossing. I'll just have to get out now, because there's a point where you have to give up. There's a point where you have to say, enough's enough, I'm getting out of the market now. And the next day, everything turns and goes the other way. And you think, what the hell? There's a conspiracy against me. But that's the market, and that's how it works. So take your losses, take your stop losses, and run with your profits. Make more on your profits, add to your profits, and that's where your income will come from. The next video, guys, will be on Monday, and I'm going to talk about what every trader needs to know in the market, because every trader needs to know what I'm going to talk about on Monday. Every trader really needs to know this. But we'll get to that on Monday. We'll talk about that on Monday. In the meantime, have a fantastic weekend, and don't forget, don't blow your account. Trade within your means. Till Monday, till the next video. Oh, by the way, guys, why am I saying till Monday? Because there is another video over the weekend where I talk about the indexes and the things that have gone by, and anybody who requests any particular stock that they might want some research on. So that one's going to come out on Saturday. I forgot to tell you about that. That's every Saturday we bring that video out. So just for information, don't miss that. Otherwise, the day trading videos are during the week, of course, Monday, Wednesday, and Friday. Thanks for watching. Till the next video. Cheers, thanks, and bye.